What's going on, everybody? This is my second time filming this. I forgot to use the correct mic, so hopefully you can hear me now. Okay, let's talk about Bitcoin on multiple time frames, also ETH. We're going to talk a little bit on the higher time frame first, and then we're going to go into the lower time frame. So we have ETH open here. We can see the ETH's had a really nice move yesterday and also into today. We can see that, it claimed this 20-day moving average. So I'm going to take away the SMA. The EMA, I think, is better for the lower time frame moving averages. And it has just blasted right through that, which is interesting because if you look at Bitcoin, it's sort of still fighting it. It is holding it for the time being, though. And we can see the ETHBTC looks absolutely gorgeous. Big breakout from this big downtrend that started in August. And if you're following me on X, I've been talking about this, that I think ETH is a better trade going forward and probably for a long time. At least, I think, for 2026. Now, I don't want to go too much into the fundamentals here, but I think it's sort of obvious that all of this integration with TradFi into crypto disproportionately benefits Ethereum versus Bitcoin. Whether that's tokenization of assets, whether that's stable coins, et cetera, while this may not be exclusive to Ethereum, you can at least see a vision. There is at least the opportunity to create a narrative around Ethereum for these things. Whereas with Bitcoin, you have to do a lot of mental gymnastics to assert that this benefits it. Because stablecoins really do not benefit Bitcoin, at least in an obvious sense. Now, more stablecoins being on chain means that more people can buy Bitcoin, right? But it's not directly stimulating Bitcoin, at least in a way that is obvious for Ethereum, right? Which is people using stablecoins could increase its network effects, et cetera, tokenization, same thing. So I think people can construct a narrative. They can use fundamentals in their head to say, oh, this is why I should long ETH, right? Whereas it's harder to do that with Bitcoin. And just take away the fundamentals. You may agree or disagree with that, but let's just look at it from a chart perspective because this chart tells you the same story. If we look at Bitcoin zoomed out, this looks atrocious. This looks like a cooked asset that is not going higher anytime soon. When I look at Ethereum, I'm like, it kind of just looks like it never went anywhere. It's still below its 2021 high. It's just in this range. And while that may be bearish for some, the fact that it hasn't broken out yet, I see it sort of like it has juice left to be squeezed. That's just how it looks to me. So I think other people may view this in the same way, particularly when it comes to the TradFi, whether institutional or retail traders and investors. Okay, so let's just kind of zoom out here and look at this before we go into the lower time frame, which I find more interesting, FOMC and maybe a little bit beyond that. So I showed you ETH has had this big breakout. It is at its 50-day moving average, which Bitcoin's not even close to at this point. I think this is a level you have to be a little bit more cautious around 3,400 because, well, this is its first real meaningful level of resistance by my estimation. Okay. Not saying that it's a short, especially since it looks like Bitcoin's going to probably follow, and that might mean that this actually tries to go to its 100, but I'm not really sure I would want to enter this just yet. However, I would be looking for a pullback or to bid a pullback. Let's say if you get something, some sort of move down during this FOMC presser or something like that, or maybe, in the days to come, this does look pretty good for now. Okay. I do think this goes lower later and probably all the way back down to the low, if not lower. Okay. We're going to go into why I think that. It's more easy to see with Bitcoin because I actually think this chart looks good. With Bitcoin, it's to me a lot more obvious that it has problems versus ETH and versus the dollar. Okay. So if we look at Bitcoin here, we go to the weekly, we're basically doing this over again, in my opinion, which is you have this big move down. People realize it's over. There are bigger participants that don't want to be in positions that maybe they accumulated higher, and every bounce is used as a way to get out of them. Now, one of the things you need to realize though is you can't just look at this and say, "Oh yeah, that's just you're just going to short that and walk away." Well, good luck, because it takes a long time usually for these things to break down further. For example, this took about 100 days to break down, over 100 days roughly, and it had a pretty significant range. We're talking like 40%. Okay, and I'm not saying Bitcoin is going to do a 40% range here. But I think you could see a range between roughly, we'll just say 75 to keep the illustration sort of easy, and like 100K, right? That's a pretty big range right there. I think that's probably what you see for months. I don't think this is just going to break down anytime soon unless you have some sort of exogenous catalyst that the market really doesn't like, which isn't exactly obvious right now. Okay, so this is sort of the higher time frame. I think we will see a move to this 50-day moving average on Bitcoin probably as early as this week if FOMC goes as the market wants. And we can see that that is roughly close to 100K, right? Around 99 to 100K. And this is that level that's almost like self-fulfilling prophecy. Everyone sort of expects for us to retest it. I just think we do. Should we? No, probably not, but we probably will, because it's sort of the path of least resistance. You had this huge move down. You find some people that come in and say, well, I'm going to bid 80 anyway. I think it goes lower, but I'm just going to bid it anyway because I don't really care about timing it perfect. I want to accumulate over time. That puts in a little floor. And then you get shorts that are like, I probably need to close as they start losing P&L as it goes higher, right? So a lot of this is short covering. And this is pretty typical of bear markets, is to have these dead cat bounces over and over again. Okay, so let's get zoomed in a little bit more and talk about FOMC. So I don't want to be positioned going into FOMC because we don't know what the presser is going to say. We had this big move up yesterday. We can see that this big move yesterday was effectively shorts getting blasted and some perps chasing it. You can see if you look at the spot to perp CVD, which is really market orders that are being placed into a line chart format. So this is the actual orders hitting the tape. There was very little spot participation versus perps. You never really want to see that if you're a bull expecting immediately higher prices. And it didn't stay up here very long. You had Coinbase limit chasing a little bit as we got there. You can see this is the 0.1% depth from the price. And they were bidding a little bit for a while towards the highs, but nothing significant. So this was not like, you didn't have some crazy bid pushing it up. You didn't have people market buying pushing it up. It was just shorts closing, a little bit of spot buying, and some perps chasing it. And that just goes to show you how liquid this market is, in my opinion. We can see also, just to throw this out there, let me move me back over here, that we left some gaps on the way up. We've pretty much filled them out. So this is actually, we're in a much better place than we were when we squeezed. When we squeezed, that was a bad place to be at going into FOMC. Now at least you've actually retraced a lot of it and it's healthier. And maybe if we get a neutral to dovish Fed or Powell, maybe we can retry this level and then eventually get to this 50-day moving average, your classic Santa rally, right? I would not bet on that before the presser. Yes, you may be buying higher if you enter the presser or after the presser, but at least you're not like just, flipping a coin here. I just don't really see the point of that. I mean, again, I do think this resolves higher because I don't see any reason for them to say anything bearish, but maybe they do, right? So leaning that we go higher, but let's just say we don't. Okay, let's say that we get a little bit of a surprise. The market's, or I don't know, maybe the market's expecting Powell to cut and be a little hawkish, but let's just say something the market really doesn't like is presented during the presser, or maybe the dot plot is adjusted in a way the market doesn't like, and we get back into the 90s, or sorry, under 90 into the 80s. That's a short, because I think you just take out this whole structure. Like assuming you get under here, you can't get back above, to me, that would mean you're probably going closer to mid 80s or lower. That is not my base case, but I would have sort of both scenarios obviously planned out going into this presser and beyond. All right, guys, I'm going to keep these videos short because I'm going to be making more of them. I hope you enjoyed it. Give it a thumbs up if you liked it and share it with some friends. I will see you guys later.